Welcome to Thought Leaders, featuring interviews with some of the best minds in the industry. Today's special guest is popular platform speaker and syndicated financial columnist, Ike Devji. Hello everyone, I'm Steve Savant, syndicated financial columnist and talk show host. In this segment, we're asking Ike, is asset protection just for high-risk clients? All from Ike's articles and contributions to Optimal Financial Health and Doctor's Essential Wealth Management and Preservation Handbook. Ike, I'm always thinking, we're talking about this. Everybody's probably watching this. My advisor's in there. Well, what's the net worth minimum here? 5 million, 3 million? I know how they think. But when we're talking about this, when we were early on in the segments, the first day, we gave a list of common questions that brought a whole uncovering of exposure, to me at least. And they were very common. That was not a high wealth or high net worth questions. These were questions that everybody qualifies for.
Right. You're referring to the risk factors that we identified, and I think we had a list of 10 that we went over together. And yes, there are a couple of other misconceptions, right? One is this just for people who are exceptionally risky? And we talked about the risk factors, and they were very generally applicable to everybody.
Let me just stop you there, because there's a two-part here. High net worth, people have money,
right.
but you may not have money, but maybe you have risk factors.
Absolutely.
Give me an example of a person who has a risk factor, but maybe not necessarily affluent.
Absolutely. Well, we, for instance, work with a lot of people who, let's say, are contractors. Right now, that contractor might be a subcontractor for a larger company, or he may own his own company and do work. And that person certainly doesn't feel rich. Mm-hmm. He's on the job site every day. He works hard. He gets dirty. He may run a crew. He may make a nice living and have a nice home, but he doesn't conceptualize himself as being, quote, rich. But he certainly has a very significant amount of professional liability for the work that he does with the Registrar of Contractors and construction defect claims and everything else. That's one common example. Another common example would be a new doctor. Right? So many of the physicians that we serve all over the country come to us with a significant amount of wealth. They wait till they have accumulated this pile of money in whatever form it is, and then one day they say, I think I should go do something smart with this and make sure that I've got a safe built around it. But what about the new doctor who is starting her career and is currently making $62,000 a year in her residency? And next year she's going to join a practice group in cardiology or pain management or anesthesiology, and her income is going to be $300,000 to $500,000 the first year. Now that person typically doesn't have a lot except a couple $100,000 in student debt and a lease car and an apartment, but they're not going to get there as an aspirational business owner or as a future wealthy person if they have big setbacks along the way. Right, so keeping people's progress and keeping their path clear and safe is a very important part of what we do on both sides of the fence.
Well, when you said that just now, I'm thinking, well, you just made a qualification on human value. I have the physician. She just came into her practice. She just is starting. Maybe she's 35, 36 years old. She's going to go to this new partnership where she's going to start making serious six figures, and all of a sudden she went from nothing to something. Right, in her transition, and now she has a value to that. I mean, she's going to be working the next 20, 25 years, and that $300,000 to $500,000 in salary, that has a human value to it, an earnable number. And she needs to start protecting that now, not when she is accumulated into her 50s.
You're absolutely correct, and this applies to a number of different issues. It applies to the legal planning that an attorney like me would be responsible for. It would also apply to the financial planning that your viewers are charged with, or the insurance planning. Are they adequately insured for life and disability? Do they have all the cross-purchase and key man type coverage in place if they're a partner in a business? Right? And a lot of this is about success maintenance, right? It's how do people can't get there if they keep having significant setbacks along the way. And we would like to help, in many cases, with working as a team with advisors, help that person ratchet up like a barber chair, right? Here's my first achievement. I bought a home, and then I started a retirement plan that we started making regular contributions to, and then we set up a savings account that we started funding, and then that went into an investment account, and then from there we bought more life insurance, and then we bought a 529 plan to protect our children's education, right? This is a series of moves that it takes your experts to make in many cases, or their help. But none of these things are going to happen if somebody comes in and sweeps the board. And so we need to make sure that we're helping the clients get there and realize the plans that you folks are working so hard to help them make.
Back to your first example before we close out the segment, I'm just thinking of your guy. He's a blue-collar construction guy. He's got a nice living. Maybe he's making a couple $100,000, clear after all expenses. He doesn't see himself as affluent. There's a lot of small businesses in America. They're the backbone of American economy that have this very profile you're talking about.
Oh, yeah, every business, from the restaurant next door to the dentist down the street and the strip mall that you take your kids to the neighborhood mechanic. We work with lots of successful business owners who, like I said, don't see themselves as rich. But if you add up their numbers and look at who they are and how hard they've worked, whether they realize it or not, they're in the top 5% in many cases, right? I mean, if you think about where we are as a country and what the average income and net worth and savings is, it doesn't take long to see how even the guy down the street who owns 2 nice restaurants is significantly higher net worth than the rest of the country. He's got more to lose. He's a better target because of that. And so knowing your place on the food chain is part of this as well.
Well, listen, for more information on how high-risk clients can actually be not only them, but for other people that will become high-risk clients, I guess if we're talking about future, just go out to our landing page and click on that information and we'll send it to you. We'll be right back with more from Ike Devji.
A solid web presence has never been more important to the success of your business. Introducing Agent Website Creator, provided by CreativeOne. Through Agent Website Creator, you can create your own personalized website and have it up and running easily with zero knowledge of programming. Choose from several designs with easy drag and drop customization. Get proven lead generation offers, professionally written articles, and helpful financial calculators. Plus, the ability to embed videos, integrate your social media, and more. Update your website anytime and show the world within minutes. The best part? It's hosted for free. To learn more about Agent Website Creator, call your CreativeOne sales team at 800-992-2642 or visit us online at creativeone.com.
In this segment, we're exposing the huge hole in business planning with boomers, all from Ike's articles and contributions to Optimal Financial Health, the Doctor's Essential Wealth Management and Preservation Handbook. Well, when I think about boomers, I am one, okay? So I'm thinking about succession planning, and you said in an earlier couple segments back, a lot of people have kind of put their they put their little shield out there, their little kind of a PR that they're now succession planners, right? And you're saying that there is a hole. You talk about 100-mile wide hole in their planning on boomers alone. What are you referring to? I've seen you write this in your articles before. What's this about?
Well, we're seeing a huge amount of time and effort and expense put into the basics of the succession planning. And when we're talking about succession planning for most of these folks, we're talking about a transition or sale of their business. And we have a situation right now in the country where we have, tens or hundreds of thousands of these successful boomer age business owners in every state, as we said, that the advisors are all now catering to by adding this to their websites and to their offerings, who are spending time and money on the tax planning, on the sales structure, on what am I going to do with this big pile of money, and how am I going to fund my retirement with it, and where are we going? Are we going to Hawaii next? Right, all the neat, fun things that happen around the sale of a business. But what we routinely see overlooked is how are we going to protect this lump sum that this client has received for the first time. And as we said, even somebody who is making 6 or 7 figures a year, or in some cases, if they're lucky, more, has never, in most cases, had somebody give them a big lump sum check that big before, right? I mean, if you're getting a multiple of your annual revenue as the proceeds of the sale, what increase in the proactive defensive planning has gone into place to help protect the proceeds of the sale that your client, the seller, got? What we typically see is that there's been some tax planning. Maybe there's some estate planning that becomes more sophisticated, traditional estate planning. Maybe it used to be, well, I'm just leaving everything to the kids. And now, because we have a much larger amount of money, we're going to leave some to charity and some to our religious institution and some to the kids. And right? It becomes more complex. But we're seeing that this gap is really, how do we securitize that money against anything that might happen, from a lawsuit to a car accident to a slip and fall to a business dispute to, of course, as we mentioned earlier, to protecting it from the buyer themselves. So we have lots of people who have spent decades learning and building a business that they are now going to sell to someone, in many cases, who has not been in that business before. Whether it is some kind of venture capital outfit or some commercial enterprise that's absorbing your client's business, or whether it's just another individual who doesn't have the expertise that your client and my client, the business owner, developed. If that person can't make that business run as efficiently, they are going to, in many cases, get their own legal team to come back in and say that it was some act or omission or concealment or competition or one of 1,000 other things they could complain about. But they're going to want to make it the seller's fault. And unfortunately, what happens to the seller is that the person who bought your business will have depleted the assets, will have depleted the credit, will have in some cases ruined its reputation and the relationships that your client may have built for 30 years or 20 years or less or more, it doesn't matter. And so all of these assets of the business, tangible and intangible, are no longer there. Steve, they're going to bring you back Humpty Dumpty's broken pieces in a paper bag and say, I want a refund. Now, what kind of thought has been put into that? Or what kind of thought
let me
has...
try to understand you. So you're protecting, you have buyer's remorse. This is what you're basically saying. Yeah. The person now, maybe he did it. Maybe it's all his problem. But he's going to try to put it back on you. And you're saying there's now protectionist tactics or strategies to protect me, the seller, in case I get somebody that's going to do this to me.
Yeah, and obviously the buyer is one major source of risk, but think about all the other sources of risk, right? Earlier, we went over the whole 10 risk factors. So if you were making $500,000 a year, and you probably, for many years, let's just pull a number out of the air, and had built up you have a nice house, maybe you've got a cabin, you've got some money that a guy like you is managing for them, right? They have these assets. And then suddenly they get a check for the sale of their business for $5 or $10 million, right? Let's assume it's a number like that. Is that person more exciting a lawsuit target when they're making $500,000 a year, or after they've sold their business and they got $10 million in the bank? Any liability makes you more exciting the more money you have. And so one of the things that there's a disconnect on with the public and financial advisors versus us as attorneys is understanding that lawsuits sometimes are about liability and sometimes about collectability. And so anything that happens is more exciting to a plaintiff's attorney when we have a collectible defendant. At the same time, we've got a guy or a lady who's sold her business and has replaced that recurring income stream with this one-time payment. That's all they've got. It doesn't matter if it's 1 million or 5 million or 50 million or 100 million like some of my clients have been fortunate enough to do. Everything that client has is everything that client has, and it's important to them. So we as advisors in our various positions better be damn sure that we are advising them on that issue. That, great, you're taking this money home, do you have a safe? And that safe that we refer to, again, is a series of layers. Policies, procedures, compliance, insurance, and legal tools that we talked about in an earlier segment, the 3 layers.
Well, for more information on the crisis in business planning with boomers and how you can use this information Ike's talking about for your practice, just click on the landing page address in the video description. And for more information on all our shows, seminars, workshops, just follow us out on social media or visit us on our webpage. I'm Steve Savant. We'll see you next time on Thought Leaders, and remember, keep thinking outside the box.